It's Tuesday, the 23rd of September here in South Africa, the day before a public holiday. We are the world champions at public holidays. And, we'll be here today, back again on Thursday. Anyway, stand by for your BizNews Breifing. In today's pre-public holiday show, overcoming diversity, Hersov says that South Africa is still uninvestable, but Dawie Roodt says, great place to live. Another step ahead for the Cell C listing, something that would have appeared impossible just a little while ago, excepting to people like Dylan Bradshaw, who's made a lot of money for himself and his clients. We'll find out how. Donald Trump on the attack again, this time Tylenol in his sights. Nvidia is betting big on ChatGPT. Sean Pesh is worried about US stock markets. We'll have financial results from Remgro, which is still struggling. But we as investors can buy it for 60 cents in the rand. And then, man, there is a great tailpiece for you today about drinking brandy. But let's kick off with Prince Mashele. He was one of the stars of the show at the BizNews conference, which we completed last week. And Prince had some interesting things to say about our diversity, often promoted as a strength. Well, right now, it might be one of South Africa's weaknesses.
This is one of the things that I have learned. Almost every week, I'm all over the country speaking to different people, whites, blacks, coloreds. There's something I have come to learn about South Africa, is this, that South Africans, whites and blacks don't talk to each other. It's the biggest weakness of our politics, of our society. We don't talk to each other. Blacks, I address their conferences. Only blacks. Whites, I address their conferences like this. Only whites. Indians, I address their conferences. I'm thinking, hey, what's going on here? We've got to break that stuff. We've got to break that stuff. Even historically, if you who are obsessed with history, the Afrikaners and the English butchered each other until they realized, fellows, let's come together. They went to Vereniging. They said, we can only govern this thing properly if we do it together. And look at what they have done collectively, by the way, since 1910 all the way to 1994, and the achievements they have made, even in terms of ending poverty among themselves. So we've reached a point where we have to come together, black, whites, and learn to talk to each other. And that discussion, by the way, needs to be led by the best among us. The most educated and the most gifted among whites, the most educated and the most gifted among blacks.
That's some very sage advice. Rob Hersov, on the other hand, has been concerned about the investability of South Africa. And in his summation of the second BizNews Investment Conference, he feels that, well, it isn't quite investable yet.
South Africa is uninvestable under the ANC. And everything you've heard over the last 2 days tells you why. And I'm not going to bang on too much about the detail. But if you're still putting your money into South Africa under the ANC leadership, you're not investing, you're gambling with your family's future. And it's not about race, it's not about the past. It's simply about competence, accountability, and results. And on every single measure, as you've heard from John Endres and everyone before him, on every single measure, growth, jobs, infrastructure, safety, governance, the ANC has failed. You just look at GDP, the only stat I'm going to give you. Since 2008, when the rot really kicked in, our GDP growth has been on average 1.3%. And our population growth, on average, has been 1.4%, more recently 2%. Every year since 2008, we have gone backwards. We have got poorer. That is disgusting by any measure. We're deindustrializing. We're the only country in the world going backwards. How did that happen? We know. I'm not going to talk about corruption in any detail, but the ANC has institutionalized it. I mean, the amount they've stolen in 4 years over state capture is more than our annual national budget. And that money should have built schools, hospitals, infrastructure. I mean, can you imagine this lost generation, this missed opportunity? Cyril Ramaphosa himself admits corruption lasted a decade while he was deputy president. I mean, that man is beyond reproach. And asking him to fix it is like asking an arsonist to put out a fire.
Strong words from Rob Hersov, but not everybody is in the same camp. Also at the conference, Darby Roodt, a leading economist, had a rather different perspective of our country.
The world of the economy is happening in the cloud today. Remember the a state or a state. The essence of a state is that it monopolizes the institution called the state. It monopolizes violence. That's what they do, and violence is usually a physical kind of thing. So they can lock you up, or they can steal your stuff, and they can do things like that. But nowadays, economic activities are more in the cloud kind of stuff, and we even use money that's in the cloud. So they're losing control over you more so. And the world is becoming a libertarian world, the world that I like to live in. And I like it that way. So how do you prepare for that? And it's like I said, people ask me, should I leave? Should I emigrate? And I say, South Africa is a dangerous place. Don't make a mistake. So be safe. Make sure that you've got all the necessary things. But apart from that, we've got, not the Cape, but the rest of the country, we've got amazing weather. And amazing weather. We've got lekker wyn. We've got lekker braaivleis and brandy and all these amazing stuff. So if you have the necessary skills and you have the proper computer and a good internet connection, it doesn't matter where you are. Then you can be in South Africa. You can hedge yourself against the threat of the state by just making sure you're physically safe and do these other things. That's the question. Make sure your kids, and remember education in the future. We've got this misconception. We've got this wrong idea about education. We put all this emphasis on qualifications, but we've forgotten about skills. We have to rename it. We call it skills development, not qualification. We produce 600,000 matrics every year with a qualification that means nothing. So qualifications, skills in future mean continuous learning all the time. And then you can be anywhere. I've got a friend. He works for a bank in Kenya for a couple of years now. He's never even been to Kenya. That's the future. That's the future of the economy.
Like a soapy breakup scene, selling your car can be an emotional experience.
Just how dramatic was the car selling experience?
Not dramatic at all. I did my research and We Buy Cars was by far the best price.
Very not dramatic. But I like drama.
I was standing there watching my phone, waiting for the money to get in, and there it was.
Yes. Car, driving.
We Buy Cars, the easiest way to sell your car by far.
I wouldn't mind a little more drama. Anybody bring me some tears?
One of the advantages of having been around for a while is that you watch the stories from close up. I remember having a cup of tea with one of the original protagonists of Cell C at the Westcliff Hotel in Johannesburg, and being told how they were going to beat the pants off Vodacom and MTN. Well, it didn't work out that way. Nothing like that, in fact. It wasn't until Alan Knott Craig, who was the founding CEO of Vodacom, moved across to Cell C and was in the hot seat there for a period of time, that it began seeing some kind of a light. It's most of the time, though, and it's been, decades. Cell C has been a big loser of money. It's been going backwards. It's been a very poor cousin of the big two. But now there's a light. Now there's a glimmer of hope. And part of the reason for this is because it's identified a very good niche. I spoke to Dylan Bradfield, who's been a big follower and supporter of the company that owns Cell C. It's listed on the Johannesburg Stock Exchange. It's called Blue Label. It was like a mouse ingesting an elephant when it did the acquisition of Cell C, which was heavily debt burdened. But it's managed in those few years to turn it around to the point where Cell C is about to be listed in its own right. That should come maybe this year, if not then early next year. But I spoke to Dylan about why the company has managed, or how the company has managed to turn it around. There's quite a story there. It's on the BizNews in-depth channel, and here is his, I suppose, primary issue on what happened with Cell C and how Cell C managed to find itself a niche.
The history to date is they are the enabler for the MVNO market. They are the dominant player in there. Alongside them is MTN. But if we are looking through the sector and where all of the retailers and banks are coming online, they are looking for a quasi-agnostic data supplier. Cell C fits that mold. Cell C comes into the market. It provides the service. It supports the MVNO structure, so it's investing in that accordingly. So it's trying to just focus on being the enabler for a new moat or a disruptor within the telco market. And we're seeing that more and more, especially through Capitec Connect.
So Capitec would be the obvious one that's gone strongly there. But who else? Would it be the banks with the cell phone offerings they have? Other banks, rather?
Correct. So FNB is probably second behind Capitec in regards to their growth, with over 1 million subscribers already. The growth, however, in Capitec is far faster than FNB's. They've just signed on Old Mutual now, which has come to market, which has also had an excellent start. And year to date, I think Cell C's actually signed up 16 new MVNO aggregators. So what we're seeing is quite a spread across the market of retailers and businesses trying to understand their clients, trying to market them more efficiently. And the whole back end of that is the luring of data, or the allure of data. You give them a little bit and you get to understand their habits and their spending habits, how they behave, and that becomes quite valuable to all of those participants.
Well, as I said, that full interview is on the BizNews in-depth channel on YouTube. Shares in the pharmaceutical company Kenvue fell by 7.5% yesterday on the strength of Donald Trump having a go at their primary product, Tylenol. Let's have a look.
Effective immediately, the FDA will be notifying physicians that the use of well, let's see how we say that. Acetaminophen. Is that okay? Which is basically commonly known as Tylenol, during pregnancy, can be associated with a very increased risk of autism. So taking Tylenol is not good. All right, I'll say it. It's not good. For this reason, they are strongly recommending that women limit Tylenol use during pregnancy unless medically necessary. That's, for instance, in cases of extremely high fever, that you feel you can't tough it out, you can't do it. I guess there's that. It's a small number of cases, I think. But if you can't tough it out, if you can't do it, that's what you're going to have to do. You'll take a Tylenol, but it'll be very sparingly. It can be something that's very dangerous to the woman's health. In other words, a fever that's very, very dangerous, and ideally a doctor's decision, because I think you shouldn't take it. And you shouldn't take it during the entire pregnancy. They may tell you that toward the end of the pregnancy, you shouldn't take it during the entire. And you shouldn't give the child the Tylenol every time he's born and he goes and has a shot. You shouldn't give a Tylenol to that child. All pregnant women should talk to their doctors for more information about limiting the use of this medication while pregnant. So ideally, you don't take it at all. But if you can't tough it out, if there's a problem, you're going to end up doing it.
Donald Trump's just made himself a whole lot more enemies. But then, on the other hand, I'd rather be warned about these things. It's, if you were watching very carefully to his right, you would have seen RFK Kennedy Jr., who is the health czar now in the United States. Still with the US and investing there, Nvidia, the most valuable company in the world, has announced that after the recent decision to put $5 billion into the US chip maker, Intel, it's now going to be putting $100 billion into the owner of ChatGPT. Our partners at Bloomberg assessed what this means.
Chip stocks across Asia gaining ground. We had seen a big rally in the overnight session from Wall Street on Nvidia's plans to invest in OpenAI. Let's bring in our Asia tech correspondent Annabelle Drewlers in Hong Kong. Annabelle, so how big of an investment and how consequential will this be for OpenAI and Nvidia?
Yeah, it's a really major investment. I mean, I think you said it earlier, but it's up to $100 billion. So it's significant, but it's going to be coming in stages. So we had a letter of intent that was signed between the two companies on Monday. We got that announcement. We also spoke with sources to try and understand more details on this. So what we understand, as I said, it's going to be rolled out incrementally, the funding. Now you've got that letter of intent in place. $10 billion is going to be deployed from Nvidia to OpenAI. Nvidia is making that investment in cash. OpenAI is going to receive, or it's going to be receiving OpenAI equity as part of the deal. Again, that's according to our sources on that front. And then further increments are going to follow as each gigawatt of power is deployed. Now, in terms of how much power we're talking about, 10 gigawatts total is the overall aim here. 10 gigawatts, you really need to also emphasize that because you're talking about the entire power demand for New York City when it's operating at peak electricity demand. So a huge amount of energy is expected to come online in this. In terms of that market reaction, I mean, you mentioned, of course, that rally we continue to see on Wall Street in tech. Nvidia closing up nearly 4%. And it is, of course, important because OpenAI, yes, they get that funding to continue focusing on AI infrastructure and what's needed to power AI technology. But Nvidia as well continues to take that place at the center of the AI ecosystem. It retains OpenAI as a key customer for its technology because these data centers are going to be using Nvidia chips, for instance. So even if OpenAI starts to look for other supplies, still Nvidia cements its role there. So something to win or something to take away for both companies here.
Well, on a broader front, at the BizNews conference last week, Sean Pesh had some warning flags that he was waving very vigorously about US stocks. It's just, again, you can watch the full interview, as you can from all of the presentations to the BizNews conference. But let's just take a highlight of Sean explaining why he's so worried about American shares.
So what if I understand correctly, you're saying it's like a Hemingway, sun also rises. How do you go bankrupt gradually, then suddenly? Is that where we are as far as the US market's concerned?
I mean, it could go on for another year. We don't know. Okay. The point is we're in injury time because, I mean, eventually what happens is who's funding Anthropic and all these guys? Venture capital companies. Now, here's an interesting thing. And private equity companies. One of the problems, it's an interesting conundrum, really, because normally when markets are at the highs, private equity companies are selling. They're exiting their businesses. They're selling to the market. And that's historically, that's one of the signs of market tops. Oh, there's lots of listings. Okay. The problem is with more than 50% of the money in passive funds, and passives only buy in indices, a new IPO is not an index. So private equity companies are struggling to exit for two reasons. One, they only want to sell if they're going to get a higher price than what the portfolio is currently valued at. So either those portfolios are overvalued and they can't get those exit multiples, but two, there's just not the demand because the passives, the active managers are busy swimming upstream, and the passive managers are not buying that stuff. So
private equity companies, what they are now doing is they're trying to sell from, they launch new funds, and then they're trying to sell the assets from the one fund to the new fund. But you're getting to the point where investors want their money back. Okay, so when this money dries up, and all of a sudden, I mean, there was an article the other day, Anthropic, I think are going to, not Anthropic, OpenAI are going to lose $119 billion in the next, before 2030. 119 billion, that's what their losses are going to be, and they're the big guys. How much are the little guys losing? So who's funding those losses? Well, it's investors. And that will be, and so eventually those investors will say, you know what, we want our money back. We don't have any new money. That venture capital funds can't find new money. And that's when it all unravels. So we never know what causes the unraveling, but you just got to know that we are in injury time.
Well, on to local news now. And the Stock Exchange News Service this morning had news about one of our top stocks in South Africa. Remgro used to be one of the best performers, lost that title a few years ago, but it's done okay year to date, up by 15.5%. Its financial results were released today. This is for the year to the end June 2025. And the bottom line here is you are buying Remgro shares today at a valuation of 60 cents in the rand. And what that means is Remgro is an investment holding company. It's got a lot of underlying businesses: Mediclinic, Rainbow Chicken, RCL Foods, Outsurance, some of the companies that did very well in this past year, Total Energies, CIVH, Seacom, and Cape Vin companies in its portfolio that did not well in the past year. Anyway, you are buying the value of all of those companies today at 60 cents in the rand. So much better to buy, if you think about it, if you're a value investor, Remgro as a whole. But it is moving in the right direction, and there's some pretty positive points for those who are invested here. 80% of the investments in the portfolio today are actually growing their profits, and this is the consequence of a 5-year strategic plan that is now into year 5. So some good numbers there for Remgro if you're a shareholder, and also one to look at if you are a long-term investor. Okie doke, we're ending up on today's BizNews Briefing with a continuation of the battle between Sir John Kirwan, one of the All Black rugby greats, and his pal, South African lock and commentator, Victor Matfield. Let's pick up on their latest tete-a-tete.
I thought to celebrate your win, I'd try some of this Clippers, whatever you call it.
You make me sick.
Yeah. Oh, that is ridiculous, Victor. You seriously don't drink that.
Coward.
This is what I drink, mate. Spritzetto. Beautiful, man.
Why are you gay?
Sir John Kirwan, there's 3 things that South Africans are really worried about. The first thing, don't underestimate the Springbok when their back's against the wall. And you've learned your lesson. I think the Springbok showed you in Wellington. Second thing, your style of fashion. We need to sort it out, but again, I think our followers would look after that. Then, the most important thing, and I'm taking my glasses off, how to drink a brandy. I've got like over 1,000 DMs about please help Sir John Kirwan how you pour a brandy. So let me show you. First, you need a proper glass. Then, you need to fill it with ice. Full ice to the top. Then, needs to be cold, the Clippies. This is something special. Lipton Premium needs to be cold. Then you pour it. Not too strong, just enough. Definitely not too strong, just enough. Put it away. Then you take the Coke. You fill it to the top. Not just a little bit, it's not cognac. It's brandy and Coke. the heart and soul of every South African bride. That's what you need. After you're done, then you need to taste it. Sweeter than honey.
I think we should be calling him Victory Matfield. Met Ace. Well, this has been your briefing. Have a good public holiday tomorrow. We'll be back again on Thursday. Until then, cheerio.